All right, so last week we discussed foundational stocks on the Canadian market, and this week I wanted to share with you 4 companies to hold forever on the US markets. You know, the beauty about the US market is it has been around for so long, and those companies are so big that they are incredibly well diversified. Some of them shows 50, 60 years of dividend growth. It's just the perfect place to put your money and forget about what's happening over the short term, and you can wake up in 10 years or in 20 years and they will still be good. Instead of doing a full analysis, I'm going just to give you the reason why I think those are forever holdings. I've picked 4 different companies from 4 different sectors. Obviously, I had some hard choices to make, but I would like you to tell me in the comment what are your favorite forever holding stocks on the US market, so again, we can build that list a little bit larger and it will be just fun. So let's start with a dividend king, Johnson & Johnson. For 60 years, it has increased its dividend every single year. That's crazy. How they are able to do that? First, diversification. About 50% of their revenue is coming offshore. The other 50% is coming on the US. They have developed an incredibly strong expertise with their big pharma division about making specialty drugs. So in the drug market, the thing is you spend bunch of $1 billion in R&D, you build your pipeline, and then you have one drug that works. You go with a patent, and then you have a specific amount of time to make some money, and after that, the patent expires, competition goes in, and sales start going down. What's magic about Johnson & Johnson is on top of having those patents protecting most of their drugs, they specialize making very hard to replicate drugs. So it means that even if the patent expires, sometimes it requires additional research or a lot of equipment to generate generic replacement. And for that reason, it gives a larger lifespan for all the drugs they're making. That ensures some stability. This is the most profitable segment of Johnson & Johnson. The second one they have is medical devices, and they will sell, actually they will spin off their consumer products like Tylenol's division next year. So then we can have a pure play on medical devices and drugs going forward. And this is one of the reasons why I have it in my portfolio. All right, so moving on to number 2, which is my favorite stock, my largest holding. And no, it's not National Bank because it's not a Canadian stock that we're talking about. I name it Apple, AAPL. I bought Apple the first time in 2014. When Samsung was expected to pretty much kill the iPhone, the same way the iPhone killed the BlackBerry before that. I started to analyze the company. I realized it was a real cash money making machine. Like cash flow from operation is just gigantic. And what I love the most about Apple is how they have created an ecosystem of product. So it's not just about the iPhone. It's not just about your MacBook or your tablet or services like Apple Pay or Apple TV. It's everything working together. The fact that they have built such an iconic brand that they don't have customers, they have raving fans. They will not stop buying Apple products because they just work so well together. One very interesting thing about Apple business model is that they don't need to be the first in the market. You know, when you look at tech stocks, most of the time, you hope that you get that technology, that new technology that will help you gain market shares and become the next big thing. But with Apple, what they do is that they generate a bunch of cash flow. They have this huge cash reserve, and then they look at the market. And they look at what's happening, and they look at how they can bring a product in a trendy market where they can enhance the product, make it almost perfect, and then start making money out of it. So they're rarely the first player in the market. You can think of the Apple Watch, for example, where a lot of companies struggled and failed making it a profitable business, while Apple did it. Today, they have multiple small businesses. And when I'm talking about small businesses, I'm talking about like businesses generating billions of dollars. So they're not that small. And yet, latest quarters, they're showing like 10, 15, $20 billion from those services. And this creates a great diversification for Apple in a way of making new services of new products in the future that will ensure that Apple one day will become a dividend king. I know we're very far away from that right now, but I'm pretty sure that in 50 years from now, they will show more than 50 years of dividend increases. Now, speaking of dividend king, I have another one on my list. And you know, this is a very short list. If you want the full list of dividend kings, you can download it from the link description below. I have it at Dividend Monk. So I review all the dividend kings. I give you my opinion, and I share with you my top 5. All in the link description below. So another dividend king here, genuine Parts GPC. 66 years, I mean, of dividend increases. Such a boring company. They're selling auto replacement parts, like for repairs. Most of their clients are garages. We don't get excited with that, right? But what happened is they operate in a highly fragmented market, so they can buy those small places, small competitors here and there. So every month, every quarter, they're looking to make those new acquisitions, and they grow. And now they have entered the European market. And what is great about such a nice business is you have a lot of repetitive purchases because cars are breaking and they need replacement parts. And that is not going to change going forward. The other thing that I love is the fact that when you are in a recession, well, guess what's going to happen? People will not buy a new car. They will try to repair their existing one. So that tells me Genuine Parts operate a recession-proof business model, which is not that easy to find these days. And even if interest rates are high, inflation is high, well, people will focus on repairing their cars instead of buying a new one. Now, the last one, but certainly not the least, actually probably one of the best opportunity in the market right now, because the market goes crazy. And when the market goes crazy and it goes down, assets manager get killed. What happened to BlackRock? Well, there you go. It is just going down like there's no tomorrow. However, BlackRock is the world's largest asset manager. They have most of their clients are institutional clients. That makes it a very sticky business because institution and even the Fed is dealing with BlackRock with their ETF. When institution wants to move away their money from one place to another, it's a big puzzle, it's a big pain, and they usually don't do it unless there's a catastrophe. So that ensures BlackRock to have a very sticky business model. They will offer you any kind of products from equity to fixed income to ETF. It's also the world's largest ETF manufacturer through its iShares series. And on top of that, they have another growth vector, which is called the Aladdin platform. Aladdin has about 20% of their market share. They are helping portfolio manager, pension funds manager to manage their risk, build their portfolio, and improve their performance going throughout time. I'm pretty sure that right now it's a perfect timing for them to try to gain market shares, to try to prove that their system is the best, and to get more pension plan on board. With ETF being the largest asset manager in the world and having one of the most performant platform to manage risk, and God knows we need to manage risk right now, I think that BlackRock is well established for the next 10 years and more. Most of the stocks that I've discussed today share a lot of great components. They have iconic brands, they have several strong vectors, they are well diversified, they generate tons of cash flow, and most of them shows a recession-proof business model. Probably not that much for Apple, but Apple makes so much money that it's not going to be the end of the world, even if they have a few bad quarters. If you want to find more stock like those, you can do it through the Rockstar list. I've created this list. It's an Excel spreadsheet with a bunch of metrics where you will find only companies with a strong dividend triangle. So we're talking about companies showing revenue growth over the past 5 years, earnings per share growth, and also dividend growth. You know, when a company is thriving, they generate more sales, they make more profit, and they share the wealth with their shareholders. When you combine those three metrics together, you're already well set to find amazing companies. So you can download this, again, link in the description below. Let me know in the comment as well, which are your favorite stocks to hold forever? It could be Canadian too as well. Mind you, I just want to build a big list here to help the community to, just narrow down the research on the best companies possible, because it's tough on the market and it's great when you buy those companies and you feel confident for the future. So don't forget to give me a thumbs up, comment in the section below, and until the next week, don't forget to stay invested.